Hey there, as you're trickling in, we're going to get started in just about 30 seconds. We want to give everybody a chance to trickle in. You are coming to the December 8th Halderman webinar where we're talking about innovative ways to finance your next farm purchase. So give it here 20 seconds and we'll get going. Thanks for being here. Merry Christmas too. Reminder, by the way, that you absolutely can turn on your camera, but the more important thing is if you have a question, you can type in your question and we will take your questions. We want to hear from you. We want to make this as interactive and informational as possible. So go ahead and get yourself comfortable, and we will be beginning here in just a few seconds. But again, do not be hesitant about questions. We want to hear from you, and we've got a panel of experts that can field just about any question. All right. All right, folks, I think we gave enough time. For those of you still trickling in, again, my name is Damian Mason, and we're going to get this thing started, but you can type in your questions and we will take them. And if you have a really difficult time with that, then you can even probably email the Halderman people or whatever with a question after this thing is over. All right, thanks for being here. Today's December 8th. It is the December Halderman webinar. We're talking about innovative ways to finance a farm purchase. We're also going to get a market update and marketplace activity report from Howard Halderman. They are in gung-ho season, if you will. If you get the emails, as I do, they've got sales going on just about every night right now. They've got new sale announcements for the wintertime. It's a very, very hectic season for the folks at Halderman. Lots of flurry of activity and lots of results, so we can get right to that. But before we do, I want to tell you again how things are going to go. Questions taken throughout the entire webinar. And if you have something after you hang up, after this is over, you know what? Send it to the Halderman people. They obviously are here to be a service provider to you and get your questions answered. We've got the people from Fractal on, and a farmer from Iowa, and a financier who's also or financial helper on the farm front, who's going to talk about hybrid methods of financing farm purchases. We're talking about $15,000, $20,000 farm ground. We're talking about elevated interest rate scenario. Got a lot of people wondering, how can I pull this thing off? I want to pull the trigger on a purchase. We're going to talk about innovative new methods that you can finance a farm purchase. And we've got just the people here for that with the Fractal folks, and then Howard's going to speak to his observation of historically how we finance farm purchases. Before we do all of the stuff with innovative methods of financing, we're going to get the marketplace update. You were just in Fayette County last night. You've got sales going, honestly, just about every other night right now. You've got a lot of activity. You've got a boatload of results. And you said before we hit the record button, there's a lot of optimism right now. The harvest came in great. The prices are holding up, and the interest rate fear that we had just a few months ago has sort of subsided, because now we're talking about the Fed holding interest rates. Lenders look like they're going to be holding interest rates. So talk to me. What do you got?
Well, good afternoon, everyone. I'm doing my 8th presentation of the week. It's been a fantastic week to be around the state of Indiana. Weather's been great. Anywhere from 35 to 55 degrees, and easy days to travel and meet with a lot of folks. We've been in front of over 450 people the last 4 days. And so that's allowed me to interact with a lot of farm producers, landowners throughout the state, as well as folks that influence land. So feedback that I've received, Damian, yields better than anyone imagined. Soybean yields that are in many cases all-time records. Now, again, this is Indiana, folks, so I'm not saying this is carte blanche for the Corn Belt, but if for at least Indiana, a lot of exceptional yields. They said, last year we made 74 bushel soybeans, this year 81. I never imagined we'd get better than a whole farm average of 74, and here we are at 81. So I think the positive yield feedback has really put some strength into the market. In fact, I had one person comment. We had 105 people in Rushville yesterday morning. And one comment was, gosh, it seemed like the room was almost giddy. Just a little feeling, and maybe it's the holidays, other contributing to it. But I think better yields than folks expected. Soybean prices that are still very profitable. Corn prices, maybe not so much, but a lot of folks feeling like maybe the bottom in corn is in, and we're going to start to see some movement upward there. Combining that with what you commented about interest rates. Now, we had multiple ag lenders in these sessions over the last few days, and the ag lender comments were, well, all of our products are down anywhere 15 to 25 basis points. I had another ag lender in this morning, 60 basis points off their peak back in September. So the Fed hasn't done anything in terms of lowering interest rates, except indicate that in the near future, they may look at reductions and not increasing anymore. So the bond market has responded, and we're starting to see interest rates start to work down a little bit. And I think just having the comfort of knowing we've seen the high in interest rates and they're starting to move down, I think is also adding to people feeling very positive or more positive about where the ag space is today.
Howard, you know what? I just want to throw it out there that you just said something really interesting. Fed policy, hasn't really changed. They've kind of been telegraphing what's going to happen for a long time. But what's the old statement? They always say when like the stock market does what it does, they say Wall Street can handle bad news. Wall Street can handle good news. Wall Street doesn't handle uncertainty. And I think what you just spoke to right there was there's almost a sigh of relief out here in agriculture and in an investor world that, okay, there's a little less uncertainty now. At least I'm kind of seeing they're starting to sort of telegraph where they're going even 1 year from now. And it's kind of given a little bit of more of a degree of certainty. Is that kind of what you're sensing?
Exactly. And I think we saw interest rates go up so fast, so quickly. I saw a chart in some bank materials that I was preparing for Monday and Tuesday with. I mean, the chart is so escalated versus any other time period we raised interest rates. The shock factor of that had to be pretty dramatic. Now, overall, the debt on ag is long-term, low fixed rate interest rates on mortgages. So it's really just the incremental financing of new purchases and your operating lines that the high interest rates are impacting. But still, I think that shock factor was pretty significant. And now that we're looking at a plateau at least, and maybe then 100 basis points coming off next year, has given people some peace of mind, some certainty, to use your word, with regard to interest rates. And I think, Damien, the other factor is they found another 10 bushel of soybeans, found another 20 or 30 bushels of corn. And so all of a sudden, and now I've heard some producers, that's been a little problematic, right? I don't know where to put it, has been kind of a theme of a lot of areas. And the elevators, well, they just closed off, and there's no place for me to take it in because, especially in Northeast Indiana, we had a lot of high moisture corn due to the environment this summer, and drying took a long time. So no fault of the end user, it was just reality. And so I think that additional revenue has been a positive.
Okay, so let's talk here real quick. So we got the uncertainty thing, which is interesting because that's sort of an ebb and flow. I mean, that uncertainty, China invades Taiwan this week, the uncertainty factor comes up again, right? But the interest rate environment doesn't move as quickly. Certainly it's not poised to move as quickly as it has over the last 14 to 16 months, where some of us thought, my God, this is happening so quickly. We've not seen that before. That yield issue that you're talking about, that threw a bunch of money out there, kind of, depending on how you were sold, how you were hedged, whatever, it threw a lot of almost, I don't want to say unexpected bonus money. When you see this giddiness, do you think that subsides because it's kind of like, it's kind of like pennies from heaven? Is it the pennies from heaven effect? Or do you think the market is more rational than that? Is it a giddy experiment right now because, oh man, I got a bunch of money that I didn't quite expect because we hit 245 bushel corn. I was expecting 220. Or the buyer's more rational than that?
I think I think it's more rational to it. Yeah, I think it is. I was worried. It rained in early August and it didn't rain again until, well, maybe we're still waiting, actually. Mm-hmm. So if you want measurable amounts. And so it was so dry and the weather was so inconsistent all summer, I was a little worried what my yields were going to be. And then they came out better than I ever expected. So I think it's a degree of relief when you talk about the yield side. The other thing that's combined with that is They've gone to their retailer and they've asked them, well, what are we looking at for cost of fertilizer next year? What are we looking at in terms of my production cost? Diesel fuel down, PK, nitrogen, all well down below last year's levels. So when you start to think about next year's break even, maybe it isn't going to be as high as what we experienced in 23. And so as a result, yeah, I got a little more income in 23. And oh, by the way, my break even might work down a little bit. So these lower commodity prices might not be as painful as they would have been had prices stayed high for inputs. So interest rates, input prices, and higher yields, I think, has led to a lot more optimism. And if I might, I'm going to show one slide. You know, in these presentations I do, Damien, I've got 60. I'm going to show one slide that kind of summarizes where I'm at with, and I want you to tell me if you see, are you seeing a summary of Halderman real estate sales in 23?
Yep. We got trend 2023, and we're starting off with Q1 over here on the left-hand side. Yeah. And then we get to here pushing toward the end of Q4. And are you showing me that we're back to where we were in Q1 and then we took a dip in Q3, or kind of what's the takeaway from this?
You know, that's why I like working with you, because you are a Purdue graduate. You're a genius. That's exactly what this shows. And you down at the bottom, you got Q1, Q2, Q3, Q4, and the distance between them is volume of sales activity. We had a couple of very large sales in Q3, September time period, a couple thousand acres each, a lot of tracts. So a lot of that sale data factors into that. But as I look at this, Q3 might be the weak quarter. When was the most uncertainty? Unknown yields, interest rate unknown. In fact, back then the Fed was talking about more increases. And that was in Q3. We come into Q4, and you're exactly right. We've kind of returned back to where we were at the beginning of the year. And I've got this in sale data through last night's auction. So this is real time. We had 4 auctions this week. All the data is in here. And, you know, so this red line that's downtrending is trending downward less. That's just the average. And I really feel like we're just seeing a little more optimism, and it's reflected in actual sale prices, and not only just a feeling in the room, so to speak.
So can you make the case that we really might have been a little better off to have purchased 3 months ago? And there's always been that thing of when everybody's rising tide floats all boats, all that. There was more uncertainty, or a little bit more fear factor, shall we say, somewhere around August, September, that might have been the time to capitalize. Although it doesn't seem like today is still a bad time, I guess. But what's your thought on that?
Well, you know, hindsight's 2020, and so you can say, yeah, if I'm a buyer, I probably should have gone to that Bingham auction back in September, maybe, because we had a lot of acres, we had a lot of tracts, and there was a principle of substitution to play there. And there might have been a couple of pieces that were decent opportunities. But on the whole, that auction brought within 1% of appraised value 6 months prior. So it sold very well. But, you know, if you wanted to go back and look, there were probably some sales back there in that time frame that might have been better buying opportunities than what you would experience today. So from a buyer's perspective. From a seller's perspective, my honest feeling is we've gotten pretty steady values all year long, even though this chart shows a lot of variability.
Hey, Howard, I got
one other slide I want to show is this one. This is the long-term look. And I had the question for Top Farmer Workshop last January. Purdue said, you know, look at 22 and those sales, and then project into 23 what we're going to experience. And all I want to do is focus the viewer's eyes on the far right. And if there's 2 sets of Q1, 2, 3, 4, and then another Q1, 2, 3, 4. The first set is 22. The second far right set is 23. And what do you notice about those 2 sections? Damon, you're pretty astute at this.
Tell me the 2 things I'm comparing.
Those 2 sections of the 2 time periods of years, Q1 through Q4. On the left side of that, and then the right side, the far right side.
So obviously we're getting more dollars per WAPI by the time we move over here to the Q4 than we did in the Q1. But I'm trying to figure out what's the reason for that.
Well, just the overall price, the trend line, if you draw a line.
The trend line is obviously up from 2016 till 2023.
Right. That's what's
There's,
doing that. But my point would be the volatility. You
yeah, what's
mentioned
this
that.
huge? One thing that strikes me is that huge blip where you cross 140, and it was only, it looks like about 1 year prior you were down at 40. So kind of, can you
Well,
speak
that's
to?
those are two individual sales, but the top to the bottom is so much bigger
Yeah.
on the right hand side than it is to this next year to the left, which is 2022. And that's the variability and the volatility that we've experienced because we've had more uncertainty around interest rates and the market in general. So I think we've gotten in a better spot today in December than where we were back in September. And that certainly our sales are showing those kind of results.
I have a question for you. You spoke about first thing being yields, and you talked about a giddiness in the room because of the what we just experienced with some really big numbers coming in, surprise, frankly, based on some of the weather factors. And then you spoke about the interest rate. These certain things matter more to different buyer classes. Now, obviously, we're going to be talking about different buyer classes when our guys from Fractal start talking about financing. Who was the buyer in the room? You know, farmers think about yield, investors think about interest rates. I think investors think more about return immediately. Farmers think more about get the asset. So what's driving the giddiness in your opinion? I mean, yield speaks to farmers, interest rate speaks to investors, I think, but I don't know.
Yeah, so I don't need to show the slide, but this year's sales, 65% of our buyers are farmers, 35% investors. That is a significant increase in the farmer buyer percentage. And my point on
that's
that,
all of 2023. That's
yes,
this year compiled so far.
yes, sir.
Okay,
And the reason for that, I think, is exactly interest rates, because the investor, and I had a client from Denmark. He doesn't have any experience in ag, but yet he sold his automotive company and he wanted to invest in U.S. farmland. So we helped him find a piece, and he bought this big piece down in Northeast Texas. Early October, we're down there looking at the farm, and I showed him 3 different parcels, a 50 acres that adjoined him, and then 2 pieces that were 5 or 6 miles away that were 300-400 acres. And he's always looking, he's got the money to put more money in farmland. And he said, okay, we looked at those, do the budgets. So I ran the budgets. The cap rate, interestingly enough, in dry land, hot Texas, is the same as Indiana, 2.5% when I ran the numbers. And he looked at the cap rate and he said, okay, I'll buy the 50 acres that adjoins me, because really I'm like every other farmer and I'm going to buy the piece next to me. But I don't need those 5 or 6 miles away, because the cap rate on those is 2.5, and I can get CD rates at 5. So why would I buy farmland at 2.5, Howard? So that's an investor's view. And so you're exactly right. The farmer understands the long-term play. The farmer understands, yeah, it's 2.5 income, but I'm going to get that long-term appreciation, and I want to own that land forever because it's not going to come up for sale again in my lifetime. So the 2 different mentalities, but I think that is reflected in the fact that a higher percentage of our buyers are farmers.
Okay. And historically, I mean, you go back 100 years ago, 95% of the purchase would have been by a farmer, presumably. And then, you know, that number has moved. Where does that rate historically? Because again, Successful Farming last week has an article that talks about investor money coming to farmland and a safe haven bet. That's a big headline. But your numbers don't ferret that out at all. Yeah, there's investors there, but in this day and age, to have 1/3 investor, 2/3 farmers, that doesn't seem like, it seems low over the last 5 years.
Low investor or low farmer?
Low investor over the last 5 years.
Yes. Yeah, it's more of a 50-50 split. It's been our experience. Now, Damian, that's our sales. When you take, and I do a survey of our staff, and I ask our staff, I said, so in the whole market, off-market transactions included, who's the majority buyer? And it's 75% farmer. And I think if you look at University of Illinois and Iowa State and other land grants, they all have that same kind of number. 75% of the buyers tend to be the farmer. And that's a pretty common occurrence in the Midwest.
So then the question, and this is a little bit crystal ball, if we move into a farm economy downturn, as we've kind of been predicted, say a year from now, cost of inputs are going to stay constant and commodity price might move a little bit. Do you think that number moves down, or in an era of higher interest rates, does it stay farmer buyer, well-capitalized farmer buyer probably, or the fractal guys are going to talk about how we can do this. In other words, does the investor percentage sort of go down? Because it seems like maybe it will, based on some of the prevailing market outside of ag market activities.
Well, I agree. I think near term, with higher interest rates and other investment alternatives, the investor is more likely to say, I'm probably going to invest in other fixed income like assets at a 5% yield versus the 2.5 farm. The one type of investor that's not, some of these pensions, endowments, long-term holds, they want to have a hedge against inflation.
Yeah.
And, we've talked about before, farmland's a 1-to-1 correlation to inflation. We certainly saw that in 21, where Indiana farmland went up 40% because we got into a big inflationary environment. So there are those that say, yeah, I know that the cap rate is lower than what I can get in other things, but I want to hedge against inflation, and farmland is that.
Yeah.
And so I think there's still that class of investor that we see coming to the marketplace. But gosh, even 1031 exchange investors, Damian, there's some running the numbers and they'll say, okay, I take my 100-cent dollars if I do the trade versus my 80-cent dollars if I take my basis and pay the capital gains tax. And then I take 2.5 yield on my 100-cent dollars and 5% yield on my 80-cent dollars. And gosh, I get more cash flow out of the 80-cent dollars. So I'll just pay the tax.
Right.
So there are some of those that have made that decision as well.
By the way, it's not too early to announce that the March Halderman webinar is going to be all about tax deferred exchanges. If you have questions, if you are an investor, if you are a farmer, if you're sitting on something and you think I'd like to sell it, but I don't know where to go with the money, I don't want to pay the taxes, this is the webinar for you. So go ahead and put it in your March tickler file that we're going to talk about tax deferred exchanges. We've got an expert on to explain that, and that's one that always gets plenty of questions. That's going to be in March. All right, so recap then the market activity, if you will, and then we want to get to innovative ways of financing. Big takeaway, here we are, it's December. Are people running out to try and spend some of that new pennies from heaven by yield bump they didn't expect? Do you think that there's a flurry of activity that then will slow up come January?
Well, I don't. The sales that are coming on the market those were decisions made 2-3 months ago. Yeah. And so that's not going to change before year end. And will buyers have money to spend? Sure. They're more likely to buy the new tractor than they will another piece of land. They'll take the land as it becomes available. And I think a lot of lenders are probably going to say, hey, you know what? You probably got a pretty good machinery line now. You may not want to just go buy the newest piece of iron. But there will be some. And in fact, I talked to a guy that he was looking at prepaying some inputs and some of that kind of thing now so that you can take those deductions. That's probably more of a tax play that you normally see. But I think, we've got 3 or 4 more auctions before the end of the year. And then usually we cut things off about the 20th. And then you get around the holidays and there's not much sale activity between December 20th and January 5th. We have fewer sales right now scheduled in Jan, Feb, March than what we had in October, November, December. And that's kind of an interesting change because you go back early in my career, first 25 years or so, we sold more Jan, Feb, March than we did in the fall. But the last 3 years, we've had pretty big fourth quarters. And I don't know if that's just indicative of society today. You know what? We made the decision we're going to sell in 2023. Well, might as well get it done. Or it's not really market timing as much. It's just, I think that crop year comes to a conclusion. Let's get the sale done, get it closed. Maybe it's partly, we know what capital gains taxes are, so we're going to lock that capital gains tax rate in and close it this year. All those different things might factor into that. But
you don't think there's a sentiment that if I wait until February, the money's going to not be there?
Well, no, I haven't heard that. So.
Well, there's been plenty of money floating around out there. And then I guess speaking of money, we're getting ready to go with Fractal. But if you have any other points you want to make about what you've seen in the October, November, December sales, because there's been a lot of them. I guess one big question. Any downward surprises? Did anything strike you? Because usually there's that one that you're like, what happened?
Well, and I have said this all week, below average land. It is easier today for a owner, a buyer, to say, that farm that's 80 acres in 5 fields, I don't have to have that. Today's interest rates, I'll just kind of let that one go. And so that below average farm or hassle farm. We had another one. It was a nice piece of land, rents really well, but my land had a creek running through it that looked like a snake. And the point rows, I just thought about it from a farming efficiency standpoint with today's equipment, not real appealing. Mm-hmm. And that one didn't bring maybe the highest price. It brought actually right at where our WAPI chart would say it would in the mid 80s. But it didn't bring an exceptional price. And I think a lot of that had to do with just the farm ability and the efficiency of it. So that right now, if you've got that hassle farm, that below average farm, that's probably the weaker segment of the market. If there was any downside feeling or surprise, that would be the one hesitancy I would have.
Got it. And then any other thing that strikes you? Because usually when you've been in the game as long as you, there's something that like, hey, one thing I saw that kind of struck me. Nothing like that.
Oh, the one thing, and I commented this to the guys before you got on this morning. Reputation of a farm. Now, how many times have I been in an auction and I hear, well, that's a wet farm?
Yeah.
Or I've never seen a fertilizer truck across that farm. Now, that's not an uncommon comment from time to time.
Right.
We had 2 farms we sold a year ago, November 29th, both at auction. One in north central Indiana, one in east central Indiana. The productivity index of the soils, Damian, were 3 bushels apart, 148 and 145. So not significant, right? Mm-hmm. You would say those should bring similar dollars. Location in real estate is always value. One was in a weaker part of the one county. The other one was in a general average county. They brought 100% difference in price. One was $15,000 an acre and the other was $7,500. You say, how in the world does that happen? Well, the farm that brought the $7,500 kind of had a poor reputation.
Yeah.
The farm that brought $15,000 was known as the best farm in that county. So when you think about why do I want to manage my farm well? Why do I want to control weeds and maximize fertility and clean roadsides and tear out fence rows and have it look like the best farm on the block? I can tell you that was one aha where I said there's value in how you manage a farm.
By the way, he's teeing us up very nicely. He did the tax deferred exchange tee up so we can tell you about the March webinar. After our September recording, I said, why don't we go ahead and expand on that? Does your land have a good reputation topic? So I think you can look for that in a future webinar because it's such a hot topic. And there's probably a bunch of things that you're thinking, well, how can I affect that? You can't affect that. And the Halderman professionals can tell you after their years of being at these sales, what you can do to improve your land's reputation. All right, let's move on to innovative ways of financing your farm purchase. And by the way, if you have any questions, type them in the chat. We'll take your questions. We are going to kick off here with our man, Ben Gordon, who's with Fractal, and we're going to hear about that. But before we do, these guys came to you, Howard, and with these numbers, interest rates, et cetera, markets are always changing. What's moving this move? I guess we've got now different hybrid ways of buying farm ground. So kind of give us a historical perspective of where you see this going and then kick it to the Fractal situation today.
So if you're wanting to get into the farmland space, I think you and I talked earlier today, the best way is to inherit it, right? And a lot of farm families, you have that generational transfer. And I presented 2 Purdue classes this fall, and I had students in each class raise their hand and say, Mr. Halderman, when are prices coming down? because I can't afford to get in at these prices. It's tough. If you want to start in farming, you got to come in, you got to kind of inherit into it. And maybe that's through a spouse, maybe that's in your own family. That with the cost of equipment and cost of land, probably the best way to do it. Then you get into conventional financing. And I think this is what has created the opportunity for these alternative financing models. Because conventional financing, you think about your house loan, they're going to look at your income and they'll do 39% of that can go towards debt, and they'll have your car loans and your house loan all factored in, and they can do that calculation. And then they're going to make you a 70, maybe 80% loan to value or price, whichever's less. But in the farmland space, you have conventional lenders, whole host of them, and they'll do that, except they have caps. And some banks might cap out at $4,500 an acre, and some might cap out at $8,500 an acre, $7,000 an acre. And Damien, we just talked about prices at $15,000.
Right.
So it isn't 70 or 80%. And so all of a sudden, if you're a new person wanting to get into agriculture and you don't have you have a 20% down payment, but you don't have a 50% down payment, well, what do? Where can you get that financing? A young person can, if they've got less than 10 years in the business, they can go through the Farm Service Agency, USDA programs, young farmer financing. So that's an option. But this hybrid, and there are various organizations out there. I'm sure a lot of folks see emails. If they're in the ag business, they're probably getting emails from FBN Finance and other organizations like that have different models. And the Fractal guys came to me earlier this year and have this innovative model. And I thought, first of all, Holderman's not necessarily endorsing Fractal because they're very new. So I'm not at that point yet, but I certainly want to make sure the market is exposed to Fractal because I like the concept. I think it's a concept that it fits certain niche situations. Mm-hmm. And if you find yourself in a situation where this could be beneficial, then these guys are looking for an opportunity. And so that's really what we wanted to do today, was bring Fractal to the market and at least show our listeners, here's an option. And if it fits you, great.
All right. So before we get into this, Ben, you just got the whole thing set up there that we didn't have what I would call hybrid financing options in the old days. There was pretty much conventional. There was maybe some USDA stuff. And then now you're talking about this new thing. I'd imagine the first question you get is, wait a minute, like almost like there's skepticism about it. So what is this thing?
Yeah, Damien, I appreciate the tee up. I mean, at its simplest, we are investing alongside farmers versus against them. And what that means is bringing in equity capital. And Howard did a great job of teeing up why we need equity capital. It's because the bank can only get you so far. So we're not replacing the bank. We're not saying don't go rent any ground. We're saying where you need cash in your operation for either a new land purchase or other improvements that'll be made, and our great customers and friends at Max Ag can talk about why. We are a source for that. And so what we will do at its simplest, Damien, is we will go into a piece of ground that you own today as a farmer, and we will invest up to 45% of the value of that field. You're going to take the proceeds from that sale and you're going to go invest it in a place where you can use it. So it might be in that another piece of ground or something else that returns at or above what you would expect your ground to go for. And we're giving you that fuel to build a better farm business. So we're not the hero, we're just the input. We're just the fuel in this. Now, on that sale, you still own the land. You're still on the title. You still have agronomic control. And we lock up that investor for 10 years. You're going to pay them an annual payment, just like you pay rent or just like you pay interest. It's just a cost of capital. It'll be a little bit more expensive. Today, we're at about 5.1%. So it's lower than an interest rate, but it's higher than that 2.5 cap that Howard talked about before, whether you're in Texas or whether you're in Indiana. And then at that end of 10 years, hopefully we've earned the right from both investors and that farmer for you to go renew and for a new investor to come in and take out that position. So that way we can be a long-term capital partner with you, because that's what we want to be. Or you can buy us out. And we can talk about the whole kind of tail of scenarios we have to kind of keep farmers in control and make sure they're in there. But at its simplest, if I just come back to it, there's this need for equity capital. There's a need to fuel the farm that's going to be around in 10, 20, 30 years. The folks like Max Ag that are thinking about not just this generation, but the next, and building a damn good business. Those folks need equity capital, because every other industry like agriculture, they have that source, and we just don't have that readily available in this industry quite yet.
So Fractal, essentially, you're bringing an investor into the ag space. You're bringing an investor in that wants a return, and it's generally a safer return because, and so you used the example of, I own some land and I want to go across the road and buy the next land. But as Howard's point, I've only got 10% down sitting in cash, let's say, and I need more than that. Why doesn't Fractal then partner with me on the new purchase versus the one that I have? Or is that something that can happen?
Yeah, I mean, it's a great point. At its simplest, I want to make sure that we have that capital ready. And so we have our whole process of underwriting the land to make sure that it's a good value that we agree to with the farmer. And we like to make sure that we know who we're investing in. So great agronomic operators, great financial operators. That takes time. And Howard can say, or Ben and John can say way better than I can, like, deals can happen really quickly. And I don't want to be in between you and your banker, or you in that deal. So that's one reason we go into that piece of ground that you own today. The other is, I really like paying for yields. I really like cash flows and productivity. Like, we are boring fundamentals investors. And that means I want to see your production history on it. So I think we're open to new fields in the future, but today we're early, and we go with kind of what is a good, safe bet for that investor that can fund a darn good farmer to continue to grow their operation.
Ben, we have a question from Sam. I think the last name is Salen. At least that's what we say, the bank in Indiana. Sam Salen says, does the ground need to be unencumbered to tap the 45% equity? And what I think he means there is note free, I think is what he's saying. And that seems like probably it wouldn't have to be, I'm guessing, from your part, because there'd be not much of that.
Yeah, we absolutely are comfortable with a first position debt. Again, we're not trying to compete with that banker. We're trying to be that kind of extra source of equity capital. And, Howard said it well, it's 40 to 60% loan to value. We're going to come in up to 45%. We make sure that farmer maintains a minimum of 20% equity. So we want that farmer to have skin in the game. That's really, really important. We're really simple. We like aligned incentives. So we both win together and we lose together. And so that way we're kind of on that same team throughout this whole transaction.
You just spoke about, that's the one that I think is the easy one for Sam or anybody like me that might have had the question. You want the landowner to, at least you will go up to you'll do the spread between the bank and the farmer or owner retaining 20% equity.
Correct. Yes, sir.
Okay. So if I'm sitting on a place that I've got half paid for, but I need money to go somewhere else, I can get that between 20% to 50% that I have, and I can grab that money from you. Your interest rates, you just gave a number of 5.1%.
Yep.
Does that float?
Once we close the transaction, that's locked in. We have to provide that transparency and that clarity to a farmer, just like when you're signing a note on the debt side, that's in there. And then that's kind of tied to that land value. So the nominal payment will move. So as land values go up, that rate, that nominal amount that you'll pay, so your end dollar amount, will go up or down with land values. And we'll just use a simple, USDA or a local survey to kind of determine that amount.
Okay. So the 5.1, using today's number, it's 5.1%, but it's 5.1% against the movement of the asset, against the asset's value.
Yep.
Okay. And then you said that it's not, if you gave the number of 10 years, they don't have to be at 10 years. There is an early out option.
Correct. Yeah. The farmer can buy us out anytime after the second year. Now the investor is compensated for that. So we get what we literally call a farmer control premium. So that is essentially what the investor gets paid for that 10-year lockup and giving farmers full control. But, talking to a heck of a lot of operators over the last, several years and building this, that control is absolutely essential to that farmer so they can invest in that field and know what their capital situation is. And so I'll give you some just dumb North Dakota math on how much that costs. So let's say we're doing a $10 investment on a $100 field, that's 10%. Our investor will get the right to 10.9%. And so that extra little share compensates the investor, but in return, that farmer is able to get the full control of that operation agronomically and financially.
Speaking of that farmer, we got John Maxwell, who's an Iowa farmer, and he's sitting with Ben Blair. Explain your involvement, how you came to this, and then a little bit about both of you, each of your biographical in a sentence or two, and then how you came to this.
Yeah, I'm owner in a family farm, Maxwell Farms of Central Iowa. Ben works with us. He's partner. He's heavy on the finance side and make sure I'm making good decisions. We met Ben with Fractal several months ago. You hear things about, I want the investors to stay out of this area. You might be at an auction and you're hearing guys talk about, we got to keep those investors out. We got to keep them out or whatever. I don't love competition, but it also helps our balance sheet. So there is some good in it, obviously. And then also, if you can't beat them, join them. So if we were able to partner with somebody, which we are historically pretty heavy on doing, different partnerships, big or small, either one, but how can we work with these folks to both accommodate what we need? It might be our farm's reputation, to Howard's point. It might be our own reputation, or it might be added assets. But how can we partner with those folks that everybody else is trying to keep away and maybe work together?
And I'm talking about Ben Blair. When I go to auctions in the part of the world where Howard and I are from, if you hear a big number historically, oh, that ground went for that, who bought it? And if it's not somebody you know, then the answer is, I heard it was an investor from Chicago. When I go to auctions, I just put on a name tag that says investor from Chicago just to get everybody all riled up. Are you the investor from Chicago, Ben?
No, definitely not. Like John said, I work here at the Maxwell office. I'm involved in several different businesses that John's family has. And my role here is just to kind of proof out some of the data and the cash flow and the financial decisions that flow through our operations. It's interesting when you hear about investors. We talked a little bit before we started recording that we're close enough to a metro area that we run up against a couple different things. As Howard mentioned, these land price levels are bringing some bigger chunks of ground out of the woodwork, for people to capitalize on that appreciation that's been there and maybe move into a different investment vehicle. So there's big tracts of lands coming up for sale. And so you do see investors coming in the area. We've seen that notably for the last couple of years, pretty heavily. And you also see a lot of 1031 exchange money from farmland that was sold into development that's trying to get replaced. So, those are, I guess you'd call them the two big whales you will see at auctions in our area. Granted, they aren't going to be interested in every piece of ground, but essentially as a family farm and, supporting businesses around it, we're very aware that that's in the industry. So then it was kind of on us to go out and say, okay, let's educate ourselves about this. We were introduced to Ben Gordon from Fractal and got to know their company. And from our perspective, John just talked about, the importance of partnerships to us and the importance of that partner, right? Because in our opinion, I think when you were talking to Ryan Moe in a previous recording, you guys were doing the SWOT analysis on the American farm.
Wait a minute. Are you promoting the Business of Agriculture podcast?
I'm helping you out here. All right.
Whoa.
Anyway, when you were going through some of the strengths, Ryan Moe, you guys both had written down that the producer, the American producer, or the American farmer as a strength, right? So in our mind, that's our business, obviously, first and foremost, but it's also a passion, and so my belief is in any sort of situation with an investor, with a party helping you either acquire this land or use an equity tool. I mean, in my opinion, John can grow better corn than a land investor from somewhere else, right? And so maintaining that control agronomically, finding the type of investor that honestly, you got your cap rate, but then also the land appreciation, right? Whether it's a hedge against inflation or, essentially they believe in the appreciation value and it's a longer term investment, through Fractal, you're starting at 10-year investment. You want a symbiotic relationship, right? We're going to treat that land the best we possibly can, from infrastructure, whether it be tile, whether it be soil health, our operation, we have a fair amount of regenerative practices that are already in place that we implement on a partnership piece of ground. But we want to find the right investor or the right group that is going to reward that and be a partner in it versus just a blind investor looking for an IRR or cap rate, a guaranteed.
So you besides promoting my podcast, Business of Agriculture, which I'll send you, I appreciate that. What about then? You just said something positive about Fractal. I guess what I'm hearing there is, and I think Howard maybe heard this also. If we're going to have investors coming into this, because I think that John spoke about this, we want to be the right investor. We want to be partner investor, not vulture investor, not venture capital style investor, not I'm swooping in and dropping a load of capital in your lap, but by God, here's the terms and conditions, because that's obviously the old, whether small business, certainly farm operations, that whole thing of then you become indentured servant. And so I think what I'm hearing is this is the capital you would choose to partner with versus some of the other non-bank alternatives. By the way, wait. Ben was just shaking his head. We're in a audio format right here. Nobody heard you nodding your head. You're gonna have to.
I was just nodding. I wasn't shaking my head. Let's not. Yeah.
Nodding. Anyway, so John, speak to that as the farmer.
I forgot what you even.
Well, there's
said.
a lot of capital. There's money that there's money out there. There's a lot of capital out there. You chose. You are moving forward. You and your financial partner Ben are opting for a Fractal type of a partnership versus some of the others.
And the reason being, obviously, we're toe in the water, like Ben said, but the introduction and our experiences so far has been much more like a partnership versus hey, John, I bought this farm for X. I need 3.5% out of it. This is your rent. Let me know if you need anything. I respond via email only. Those aren't the partnerships. They don't care about my family necessarily. They don't care about the guys I work with. They don't care about the production or the health of the farm, any of those things. They do to an extent, but the most important thing in their mind is their wallet. And not to say that mine is not important, because it is, but that's also, I have to make sure I'm doing things correctly because I need people to survive. And I need those businesses and those folks, my partners, to be healthy as well.
I want to go to Ben Gordon. Who uses it? Who everybody in business, Howard Holderman knows who the style of person that's his. We all in business look at who we think, okay, who's the type of customer that uses this product? Who's the type of client that who do you see as your demographic?
The farmer who is actively planning for themselves, their family, or their business partners to be farming in 10, 20, 30, 40 years, and they're actively moving in that direction. Because when you walk onto Maxwell Farms and kind of the broader Max Ag group, like that's not a normal farm. They think about building a team. You look at really darn good agronomic performance. You look at discipline and innovative kind of financial performance. And so we're a tool in the toolkit for that. I'll embarrass John and Ben all day. Like they tore apart our model and they did more analysis on that than some of our investors have. And I appreciate that. We like that. We want that, because our bet to our farmer or to our investor customer is we're going to find you the best darn farmers on the best land, and that will drive better returns through the win-win because they've managed it better. It's not just the whole asset class moving. They've managed that asset really well, so more can grow. That's more cash flow, and then everybody wins off of that. And so for them to have a stronger business and for us to play a part, even if it's a bit part, that is a damn good thing for us and our investors. And really, if you think about who this isn't a fit for, if you're not building a growth plan, you don't need to grow. And that's not just in acres, that's in your overall business. We're not a fit. Equity capital is more expensive. We are more expensive than debt. Even you're paying appreciation and you're paying that 5.1%. Yeah. But you're using us plus debt, plus your own ingenuity to go build a bigger business, just like investors do in every other one. So really, at the end of the day, like if you're trying to build that business for the future, especially through the ups and downs, like that's the sort of customer that we want to have. And, we don't expect everyone to be at the level of a Max Ag. You go there and the first thing they asked me when I came to their farm was, hey, what are we doing that we can improve on? Like, that's usually a pretty good kind of like first question is, are these folks that are looking to improve that operation? That's a Fractal customer through and through.
Howard, I wanted you to hop in here. If you've been around this game long enough, meaning real estate, farm finances, lived through the 80s, there's always been different levels of lender. Our farm credit friends, our agricultural lending banks, et cetera. Then there's that next level where interest rates are worse, but credit worthiness is a part of that. In other words, there's always been that tier 2 lender that's like, oh gosh, you have to go there. Is this sort of the alternative to that? Is this hybrid type of model? Not just Fractal, but anybody. Is this the next step that may be like, yeah, it's not that I'm got bad credit. It's just that I've only got so much of my own capital and I am in expansion mode and I don't want to be going and paying loan shark type interest rates. Is this where this goes?
I think so. I think you've had the traditional lenders, you've got the traditional conventional loans. And for those that can do that, that probably still ends up being the best, leaves you in full control, best interest rate environment, et cetera, et cetera. You have had the lender of last resort, and there's those and that's a heinously high interest rate that I think a lot of folks don't want to get into if they absolutely don't have to. What I love about Fractal is that they are partnering, and I think that's a key word. And both Ben and John said that they appreciate the partnership relationship. And the way Fractal's viewing it is they don't want to come in and control it. And I really look at Fractal as a different investment vehicle. We have a affiliation with U.S. Agriculture. U.S. Agriculture is an asset management company building farmland portfolios for various investors. And so you got an investor that says, I want to put $100 million in farmland, U.S. Ag, go out and build a portfolio for me. That's one type of farm investor. You got another type that's the 1031 exchange and they want to buy and lease. And then you've got these investors who say, I want to be in the ag space, but I want a little better yield, which Fractal could offer them a little better yield than just 2.5%. But at the same time, I want to be exposed to what the overall market trend value is doing in farmland, because I think long-term that wins. And Fractal gives them that exposure. But I like the approach they're taking because they're doing it as a partnership and they're doing it with producers that are going to make that farm better, because Fractal knows if that farm is better and the overall market moves up, just like I talked about the 100% difference in price because of the reputation, then Fractal's investors win too. So it isn't the high lender of last resort interest rate. It might not be as great as your conventional financing, but if you are in growth mode and you need that additional capital, it's a worthy niche spot. I refer to it as mezzanine capital, and I don't really think that's a fair term, probably, because that usually gets a high interest rate connotation. But it's a hybrid capital, I think, is a really great way to say it. That it's that niche spot that I think can help people, especially if they've got a key deal they want to do and the timing's tight. I think Ben and his team at Fractal can probably help them out.
Yeah. So I actually, the term mezzanine capital went through my head when Ben Gordon began speaking about this, but that was always the term of, that was almost like second round, wasn't it? That was always kind of like the company that burned through the initial investor money, and then they were pulling the, oh crap, we got to figure out a way to keep the doors open. We're still not profitable. Okay, here comes the mezzanine round. And that's not what you're doing at all.
No.
Who are your investors, Ben Gordon? Because the people that listen to this, not just the ones that are on here live right now, Howard Haldeman has people call their office every day, I assume. It says, I've got a couple $100,000 and I want to go somewhere with it. I've got some money. I just sold some. They've got people that have money. Can they become Fractal investors? Or is that not where this goes? Do you have pension funds? Do you have firefighter retirement funds? Where's your money come from?
Yeah, it's a great question, Damian. I mean, right now, most of our investment pool, so we're raising a commingled fund. Most of that is high net worth individuals, family offices, family foundations, those looking for exactly what Howard said. They're not looking for that direct control because they believe in that farmer-led thesis, but they want that exposure. They want that extra little boost. And oftentimes they believe in kind of what soil health can bring from both a financial and an environmental perspective. So yeah, we're always looking for great partners, and we're lucky to have a great partner in someone like Halderman already. I think
The big-
longer term, we're a lot more flexible. Like I will happily take institutional capital, individual. Like the most important thing for us is we have a very tight farmer contract. We have a set of promises that we make to the farmer. The farmer is the unlock. They are our first customer. And they are our first customer because they unlock things for the investor as well. So I can say they're our first customer to an investor right to their face, and we will, because it's really important just to be clear about where that value gets created. So really for us, that investor is somebody who believes in that thesis of farmer-led investing, because if that doesn't click for all of us, it's just not going to work.
When, just to explain part of it again, thank you, Ben. So the person that says, man, I still want to make sure I understand this, because it's a little different. I mean, let's face it, this isn't just going and getting a loan from my local ag lender, and it's a little different. I get I get in hold of you at Fractal, and then you gave a number of 5.1%, but then you also said the appreciation. How is that? So the 5.1% is very easy. We know that's, amortize that, blah, 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 you pay it. How is because the investor, the Fractal, you get a piece of appreciation on if you had, let's say, 30% of my land, because I've got 20%, you've got 30%, the bank has 50%. How do you get paid on that appreciation 5 years from now? In addition to the 5.1%, you as Fractal and your investor gets a piece of that. How is that payable?
Yep. So at year 10, remember how we said either that farmer will buy us back out or will renew with a new investor?
Yep.
That valuation is going to be set by a independent third-party appraisal that we don't have a direct relationship with. So either a vendor or somebody who's just given that true independent appraisal. I happen to know a couple people on the call who might have a few of those in there. And so, that goes in, and it's something that Fractal doesn't control the valuation method. The farmer doesn't control it. It's set by that third party. If one of us agrees or disagrees with that appraisal, we can order another one. Still has to be independent, still has to be certified. In that, we'll take the average of it. And it's all about having those aligned incentives where one of us can't just game that system so we can participate.
So Fractal gets the 5.1, you get the 5.1%, and then nothing until the end of the 10-year term on where the appreciation or depreciation. Now, do you participate in the depreciation?
Yes, sir. At 10 years, like we win or lose together. And it's that symmetry. That's real partnership. You got to lose together. You got to take your licks together and you win together.
Okay. So all of a sudden then this could be a deal. If I needed your money 10 years ago, and after 10 years, there's appreciation, and John Maxwell is sitting over here and he says, this Iowa piece of ground went up another $5,000. They've got to give a part of that to you. They've got to come up with the money, or how does this work? Because it's the same old thing of like, I've got to come up with the capital gains on something. How does John, what is your thought on when that day comes 10 years from now? Then can I just do
one framing thing, Damian? So remember what they're going to use that capital for something. So it's not just this deal. It's this deal plus whatever everyone's using the capital for, and how that builds out. So sorry to interrupt, John.
No, that's great. From my perspective, the farmer is exactly that. It's just like a marketing plan or a plan for my crop for 2024. If I had X, $100,000, whatever it was, what would I do with it? So Ben Blair and I and my brother, other team members, what would we do with this? What's our return on that? So let's use something simple, tile on a farm. We have a 250-acre farm. How much would it cost to tile it, to drain it? It's near perfect CSR, PI rating, whatever you want to use. What's the gain on that? What's the bushel gain? So on and so forth. And then can we put that money away to pay for that? Maybe it is worth $5,000 more an acre. So it's all about a plan. If we didn't have a plan, I wouldn't be comfortable doing it. And a guy shouldn't be comfortable borrowing money from the bank either if he didn't have a plan. So from the seat I'm sitting in, it's really no different. This is a partner that helps me build that plan. I have team members that help me build that plan, and that's why I'm comfortable.
So John, do you anticipate buying them out at year 10 or rolling it over with a new investor?
We've talked about both. If done correctly, I don't see why it wouldn't just roll, and that's the seat I'm sitting in. If you're building it, if you're building I've got 4 kids, my brother's got a couple, the team we have, there's several employees here, we want to grow it.
Right.
We're always going to need capital, whether it's cash or, something. We're going to always need partners in some fashion. We're always going to need folks we can trust. So this is both, number one, building our network, and number two, access to capital. And again, if done correctly, I don't see why we wouldn't continue it.
By the
And
way,
I
if you
think
have questions. If you have any questions, type them in. We've fielded just one question so far from the audience. If you have any questions, please type it in there. I'm sorry. Go ahead, Howard. Or
No,
Ben.
I didn't say anything.
Ben.
no, and I was just going to piggyback on what John said and emphasize, if you're looking at any, in this realm of these different vehicles or this hybrid model or whatever it is, just make sure that plan is there, right? I mean, when we looked at it, we picked a dollar amount, that said, okay, here's our plan with it. Here's our projected return on it. And then you've got to look at it. Okay, well, if land depreciates, then you got that 5.4% money. And obviously the goal is to do much better with it through executing the plan you've made. But it's also looking at the flip side. Okay, so let's say 4% land appreciation. What does the actual cost of money look like at that point? So it's the big thing as the person, the farmer that's partnering with this equity tool or this capital injection, just know where you're at and know that at any time you have the flexibility to exit this position. And based on your plan and your projection, you're going to be able to do that and be money ahead and your business will have grown. So the plan part from the farmer side is the big thing.
Ben Gordon, I think a strong thing to do is, since this is your baby, walk through how you would use your own product, because that's what I think the benefit here is. Howard knows what he knows, and the Iowa guys know what they know, but how you designed this. Tell me how I use you. My banker buddy tells me that the best thing he can ever do is tell people, yeah, stop worrying about interest and money. He's like, help me get your business to where you make money. So show me that.
Well, first thing, I'm not sitting in a farmer's seat, and I'm not having to live that. Like the family homestead is on the other side of the family, so I'm not going to pretend to know all that. So that's my one caveat, Damon. But when I look at our product, equity capital, that just sounds like a finance buzzword. But what it really is this is part of a way to fund a broader business. And so when I look at great farm operations, and I'll use kind of the in general ones, but really a lot of it's gonna echo what you heard from John and Ben. Like, you have a growth snowball. Like, you have a real estate business that secures your land to operate on. You have a great operating business that goes out and it grows a good crop as efficiently as possible. And maybe you have some other businesses. And often you need to grow that to stay competitive in your area. And so how we built this thing is, hey, you right now can maybe grow by whatever your number is. Is it 100 acres a year, 500 acres a year? With Fractal, I'm going to be able to take that growth snowball, and I'm going to be able to add 20, 30, 40% onto it, depending on what my cash flows are, so that I can grow a little bit faster and I can add a little bit more to that operation. And it's not just about growth, it's also about risk management. So Ben Blair, what he said on that symmetry of it, if land values go down, I've protected my operation financially from that to some extent. Also, I'm maintaining control. And that's really, really important for me as somebody who wants to serve farmers and from what we've heard from farmers, because I have an idea of the investments that I want to make over the next 5 years. Now, I can't predict the future. I don't know where interest rates are. I don't have Howard's crystal ball in terms of all the land sales that he sees. So I have a feel, but I have to be ready for, 5, 6, 7 different big scenarios. And that's a family legacy that's often at stake. And so I know that I need to have dry powder. And so at the end of the day, it's like, I have a base growth plan. I'm going to use Fractal to make sure that I'm not dipping into my reserves, because if we hit a bad commodity cycle and something crazy happens, I need to make sure that I'm not only ready to survive through that, but I can grow through that, be greedy when other people are fearful. As you were kind of mentioning up front, Damien, in terms of where land markets are at. And then the last thing that I really would care about is, okay, is this something that can matter not just for this first deal, but longer term? Because these are not needs that are going away. There's a lot of change on the horizon for the American farmer. I think the American farmer is best positioned globally, but you look at autonomy, you look at where sustainable aviation fuels are going, you look at where environmental mandates are going. A lot of those things are going to add a lot of complexity and variability to our entire world, and you're going to need to be ready for it. And hopefully Fractal can just be one bit part in that farmer success story, because again, we're not the ones doing the hard work. That's that planning, that's building that machine, that's building that snowball. We're just funding those folks and working our tails off to earn that business.
We got a couple questions over here. And by the way, John and Ben from Iowa, I want you guys to kick in here if there's anything that strikes you. We're in a commodity production business. Obviously, you know that, John, and you probably wondered this, and maybe you already know the answer, but I don't. You get into year 6 and you somehow terrible things happen. Maybe not you, maybe the other customer. What happens if you can't obligate your 5.1%? If you can't obligate your annual payment to Fractal's investors, what happens?
So probably kick it back to Ben Gordon here, because there is a vehicle in place, obviously not as attractive, but Ben, you want to hit on that quick? Because I think it addresses that question pretty well.
Yep. So the farmer has the ability to actually pay with additional equity. So the fractal share increases. Now it is more expensive. It's not a 1-for-1 trade because there's equity risk and time value of money and all those other financial concepts. And that's why we only go to 45%, not 50%. So there's a couple of years worth of buffer that's built in. But at the end of the day, and I think this is where you might be going with it, Damien, is like, you know, if a farmer exceeds that 51%, so now we're in the majority as Fractal, or some other condition happens and we hit a default, we're going to have to force a sale. And, you know, that for us is a really important thing to be upfront and transparent about, because we need to defend the right to go get capital to serve farmers. And so if, you know, one of our many customers is the one that kind of, you know, is losing that right, like, this is still a business. And this is why we work with great operators who both recognize that, but are also very low likelihood to go do that, because, you know, we're all just very wide-eyed about, you know, the reality of the world that we live in.
Yeah, I mean, it's not, nobody thinks you sound harsh. Obviously, if you don't pay the bank, something bad happens there also. I mean, that's what happens. Related question, does or would Fractal hedge its exposure in futures markets, particularly if it ends up with concentrated risk exposures in the region and the crop type? That's from Susan. So I think that I probably know the answer to this. I think that you're going to say that's probably not, that's getting a little bit out of your wheelhouse, I'm guessing.
Yeah, I think I love the intent. How do we manage our risk on our side? As I'm guessing what Susan's really asking. And for us, if you look at a Fractal model where, you know, I have some Iowa farm ground, I have some Indiana farm ground, I have some ground in the Delta, and then we're up here in you know, beautiful frigid North Dakota. That's a pretty darn diversified portfolio, especially because we're in minority in investments, and we're able to kind of pick and choose because our investable universe is so wide. These great operations, so we're able to really kind of diversify away some of that risk. We're still commodity row crop investors. You know, I spent some time in San Francisco. You're not going to see me touching Central Valley agriculture. It scares the heck out of me, and it's not kind of where I grew up and what I know. Just not my world. So there is some sort of concentration in that, and that's deliberate because we really like that commodity exposure from a financial standpoint. That's where that inflation protection really comes from. But we do have some limits on how much we can deploy in given areas at a given time. But we are always or try to be as transparent as we can be with all of our customers about kind of capital availability and, you know, what they can 100% rely on versus, you know, where we might be at. And, you know, Ben and John, if that's not your experience, like I have no problem getting hosed in front of a bunch of smart people.
I don't think anybody's doing that. All right. We don't have any more questions. If you do, type them in there. And then I want to make sure that John and Ben got to talk about what they came here to talk about, you know, growth, opportunity. I think if you're a large scale operator, you're going to be presented with more of these types of offers. But that's my gut. That's my gut. And Howard's nodding his head. I think that you're going to see, as we have a consolidation, which has been going on since the 1930s in agriculture, larger scale farm, more capital deployed, because obviously it takes capital to be in this business. I think there's going to be more of these opportunities, offers, hybrids. I mean, and Howard, maybe speak to that. I don't think that, and I'm no way diminishing Fractal. This is a great discussion. I think that Fractal is one of what will be multiple of these, and they're not going to all be the same. Am I right about that? Because of the money that's out there that will then come to this industry?
Well, Damien, in the residential space, you got Quicken Loans. You've got a bunch of fintech companies that are competing against the banking industry today. And I really think that that would argue that you're going to continue to see more of these kind of models, because you have investor capital looking for a certain return. And I remember sitting down with a couple of investors in New York a number of years ago, and they said, well, we want 15% return. I said, well, that's not what we do. We buy land and it's going to generate you 6 to 8 all in year after year, which is coming out of the factory. No vacancy rate, but it's going to be 6 to 8. And they said, all right, well, I guess we're done here. And So there's folks looking for that kind of yield. And Fractal, I think, opens the door to its ag exposure, but with a little potential higher yield than just owning the land yourself. And maybe a little less risk as a result. So I think it
we're
opens
still
the
not
door
at
to-
15%, sir.
What's that?
Now,
I said we're still not at 15%. We're still just farmland, and we don't pretend to be anything there. So I know that conversation all too well.
But the percent appreciation can help the overall return on top of your 5. So your cash yield of 5 is better than my 2.5.
Yeah.
So that there are investors that are motivated by that. And I think as long as there's money looking for that kind of home in a relatively safe investment, then you're going to see more of this type of thing develop.
John and Ben, have you been approached? You have been. You know, my joking about wearing the name tag investor from Chicago. Fractal's not the first person that came to a large scale Iowa operation that has decent financial fundamentals and said, would you consider this? Right?
That's correct. They're not, but for us and the way we conduct our business is based on partnering with somebody that has the same values as we do. So
speaking of that, John, Howard let it off. The best way to get farm grounds to inherit it, and I didn't get anything inherited. Could you adopt me? Because I actually, and I mean, or maybe you have a grandmother that could adopt me, because I think that would still be my chosen method. If I were going to approach you, it wouldn't be as an investor. It'd be just,
right.
I want to be kin. I want to be sibling.
Yeah, but you don't get any cash unless you sell it, right? So I don't have any intentions of selling anything. So hopefully.
You have
And Damien, my adoption papers have to clear first before you get in line.
I get in line after you. All right. I think we've answered the questions here. It's fun to close out with that thing right there. Is there anything that we didn't cover that we need to, where this space goes? Ben Gordon, since you're our closing guest, is there anything that we didn't cover about this?
Yeah, I mean, I think I just go back to what John and Ben Blair said about having a plan. And, you know, don't start with Fractal, don't start with any of these other alternative financing options. Like, what's your goal on the farm? And if your goal is to have an operation that's going to be around in 10, 20, 30 years, that's when you start looking at folks like us, and, you know, others will come. But, you know, really make sure you have a plan, because this is just kind of a math problem. At the end of the day, there's not enough cash flows coming off that farm, and there's not enough cash sitting in banks and most farmers to grow at the level they need. And what scares the heck out of me is farmers that do have that goal of 10, 20, 30 years, but don't have a plan and haven't, you know, done that math. And, you know, we're going to see a lot of really good farmers lose out and become subscale. And that's not the future that we want to have, whether they're a large scale operation or a small scale operation. Like, we are a type of tool that can be, you know, one of many in that toolkit.
I made the prediction that, you know, and Howard said it, there was a time way back when there was a 30-year mortgage, and then it became a 15, and there became a 723 balloon, and became an adjustable arm and a 525. Money got repackaged. The point is capital, and I think my perception out here is, as the capital becomes more intense for farming operations, it's going to be coming in different packages. So I think that this innovative and new ways, and I think Howard agreed with that, there's going to be new methodologies that capital comes to this industry, and this is one of them. That's been my observation.
Yeah, and my history and experience over 35 years is, you've got banks that decide to come into ag when it's really good, and then they get back out as soon as it turns down.
Yeah.
And so you've had these financiers do that. The ones that really win are the ones that partner with their customer. And they understand ag is not a consistent year-over-year business, and it has cycles, and prices go up and down, and weather can be difficult. And they partner with that farmer to make it happen. And they have a lot of grace when they need to have grace for those tough years. And that's what I like and value when you hear Fractal say, we're aligned with that farmer. And that's what John was looking for, and I think Fractal's providing that. So anyway, that would be my conclusion, is that any financial partner you pick, be it a base lender, conventional loan, that's the kind of partnership you want. That's the kind of relationship you need to have with that part of your operation, because they become a partner with you.
Yeah. And we think there's going to be more, not, and we're not saying, oh, Fragile, you're just one of many, but I think this is this is innovative. It's innovative.
Yeah.
And that's what we call this. We call it innovative ways to finance a farm purchase. There's going to be more innovations that happen in here. All right. His name is Ben Gordon. If you want to find out more, where do they go, Ben?
Fractal.ag. Apologize for the North Dakota accent. So fractal.ag, or my email is ben@fractal.ag.
And then if we want to talk to the farmer, John Maxwell and Ben Blair, it's Maxwell Family Farms in Iowa. Is that what we're talking about?
Maxwell Farms, or my email address is John, JOHN @maxag.us.
Got it. So if you want to go direct to the farmer and find out how this is working, go to John. If you want to talk to Ben Gordon at Fractal and find out more about their innovative ways to help you finance farm purchase, you got the hookup right there. If you're listening to this recording and it's helpful to you, share it with somebody else. I'll be sharing the recording around on social media because this is a whole new era in agricultural finance. And I think this is a great discussion. Also, the market update that Howard provided up front was very helpful. And we're going to leave it there. I think, Howard, you're going to do another one of these. I'm going to join you. It's going to be sometime in spring, and it's going to be discussing tax deferred exchanges. You're going to bring on an expert to talk about that. We're going to clarify it. If you have a question, can I sell my daughter's horse and take the money and turn? Anyway, no, you can't do that. But it's all about tax deferred exchanges, about like kind exchanges, 1031 exchanges, tax-free exchanges. You've heard them called all those things. It's all basically the same thing. Tax deferred exchanges explained coming in spring for the Halderman webinar. Until next time, thanks for being here. My name is Damian Mason on behalf of the Halderman Real Estate Farm Management organization.
Thank you all. Have a Merry Christmas.
Thank you.
Bye now.
Gentlemen.